Real estate investing can bring big reward and big risks. So know your risks. Welcome to the Real Estate Risk Report, the show for real-world insight on real estate investment risk. Now, here's your host, Lance Pederson.
Thank you for joining us. This is the Real Estate Risk Report. As always, I'm your host, Lance Pederson. So today I have with me Bobak and Mark with Bay Housing Investments. As the name sort of implies, they are down in the Bay Area. How you guys doing?
Good.
Doing great.
It's very good. Yeah, this is only the second time I've had sort of a duo on at the same time, but to get the full effect, the 1 + 1 = 3 effect, you've got to have both Bobak and Mark on together. So I asked these guys to come on mainly because I'm a frequent stalker of real estate Twitter. Meaning I'm a lurker or whatever you call it. The guy who doesn't really say much, but sort of pays attention to what they're doing. And, and of late, and it's gone further than just real estate Twitter, but, there's been a lot of talk about, California in general. I'd say the Bay Area specifically, of a lot of, people moving out of town, right? They're heading to Tennessee. They're heading to Austin, Texas. They're all moving to Florida. Silicon Valley is moving to Miami specifically, right? So there's all these things, and it's a big deal, right? All the memes of the governor of California is Texas #1 the realtor of the year. All the jokes are being made, and so I thought it'd be interesting to have these guys on to sort of talk about it from being in the market, and in particular, they've been executing even on the run up a very specific strategy. That one I think is it requires a lot of discipline and patience, but I think is just indicative of the fact that there's a lot of ways to make money in real estate, a lot of strategies that one can employ, and it's not just the same as what everyone else is doing. Everyone chasing the same 200 plus apartment, multifamily deals or whatever, and there's nothing wrong with that, right? Like, but I thought it'd just be interesting to pick your guys' brains on that. So before we get there, though. I always like to kind of start out just maybe, each of you just share a little bit, like, how did you get into, what pulled you into real estate? Because I know in both of your cases, you have other things that you do currently and you have other things that you've done like this. It's not, this real estate thing is like many, and I think it's a big, thing we see now too, is that having just a single stream of income is not the greatest idea anymore, right? So the degree that one can sort of diversify where your money comes from is a really good idea, and you have more and more people sort of exploring that. And I think it's the heart of why we do this show. So Mark, maybe just share a little bit with us sort of like where you came from, what your background was, and how you kind of made what your on-ramp into this real estate world was.
Sure. Thanks, Lance. So just like many in Silicon Valley, I started in tech, and I happened to have a friend early in this last real estate cycle that introduced me to real estate in the Central Valley of California, where prices had dipped drastically after the Great Recession. And we were buying properties for 35 cents on the dollar there, fixing them up and renting them out. And that worked really well. And so from there, I diversified into other markets, as well as a fix and flip business here in the Bay Area. And subsequently, I had an opportunity to meet Bobak at a training session for multifamily properties. And our philosophies aligned very well. So we got together, and we have since then been pursuing multifamily properties right here in the Bay Area, and seeing much success from that.
Cool. Yeah. How about you, Bobak?
Yeah, and I was attending UC Berkeley when I started getting interested in real estate, because I realized it takes probably about 30 years to work as a professor before you can purchase a home here. So I started looking at the dynamics and the economics of housing in the Bay Area. And I realized that if you wanted to stay in the Bay Area, you definitely have to think very deeply and very hard about what your income structure, wage structure, and so on is. And just got very interested in the economics of housing And from there, I started basically getting ready for acquiring real estate here in the Bay Area. And I made my first purchase right out of grad school in 2012. And it's been pretty good. It's been sometimes a little bit tougher, sometimes a little harder. We have a very highly regulated environment to work in California, and especially in the Bay Area. But learning the ropes and learning to navigate the regulations and other issues that come up here, that's been, a PhD by itself. So it's a learning experience.
Yeah, exactly. There's a lot of interesting dynamics, California has and probably always will. So, I mean, there's a great segue then, as I mentioned, you are sort of seeing a lot more people. I mean, with the pandemic, obviously the notion that we had to work from home, housing is expensive. If I'm going to work from home, I might as well live someplace that's, costs less. It doesn't take a rocket scientist to figure out that, okay, people are moving around. And I think it's happened around the country. These things like this happen, they reassess their situation, and it sort of spurs, some movement, right? So, with you guys being sort of boots on the ground there, I mean, what's really going on? I mean, like what do you see, or how have you seen it impact? I mean, because of course, before we hit record, we even kind of talked about, it's markets. So like you could say, hey, it's a big market, the Bay Area. It's easy to say but inside of the Bay Area, there's many different submarkets that from my understanding, they operate very differently, right? Downtown San Francisco is different than East Bay, things like that. So maybe just give us a little bit of color as to like, what are you seeing on the ground in terms of that kind of movement, or how is it manifesting itself? I don't even know the right question to ask, but like how do you see it from where you sit?
I think you're right. I mean, you have to look at it from a granular sort of perspective, and you have to dig deep to see what's really going on. Obviously, there's a lot of variation. Office and retail is not doing that well, obviously, no matter where you look in the Bay Area and which submarket. But that's really national, I think, and it's not specific to the Bay Area. So obviously in multifamily, I would say that things don't look anywhere as bad. In fact, in some areas, it looks like we're gaining some tenants. The rents have probably bottomed out at this point. And in terms of migration, a lot of the migration really has been from the core Bay Area to the outer Bay Area and Central Valley. So yes, we've seen people say, I'm moving to Austin or I'm moving to Miami. But in fact, if you look at the data, it shows that startups or founders, there was only a survey done that said only 1.5% are going to Miami and 3% going to Austin to start new businesses. The majority are still here. And so the engines of what has been in the past 30, 40 years, which is the universities, the high number of PhDs and masters, people with professional degrees who basically undergird this economy, they're not going anywhere. So they're still around, and Mark can point to a number of companies that have moved, but those are companies that are pretty established, like Oracle and
even if they move their HQ to Texas, it's still there's a big footprint there. So and even before the pandemic hit, huge undersupply, right? I mean, there wasn't. I mean, that was an issue. I mean, maybe give us a sense of magnitude of what the undersupply was of, let's just say workforce housing, because that's kind of where you guys are at, right? You're not, you guys aren't interested in the Class A, the prettiest stuff out there. It's more of like your average Joe, right. Which of course is funny to say when it relates to you guys.
The average Joe who makes $200,000 a year.
Yeah, exactly. It's a little bit different, but nonetheless, that is what it is. It's workforce housing to them. Like, they want to be there. They're not leaving. So maybe give us a little bit of magnitude of like how big the problem was, before this thing set in and how short we were. Maybe Mark, you got some information.
Yeah, I think there's a statistic out there that stated there was a shortage of something like 628,000 multifamily units short in the Bay Area over the past decade. And so that problem continues to be there no matter what. And in fact, every time we see a recession or a pullback in the economy here in the Bay Area, we actually see the problem get worse. And, there's a recent statistic that said that in 2020, the number of permits being issued for new multifamily properties has literally cut in half. So with that said, you can see that as we recover from the pandemic, the problem will probably be even worse than previous. So that is an issue that we think will continue. These issues are impossible to predict, given that we've never had a pandemic of this before. But we're optimistic that things will recover and that the pandemic really is a temporary setback in the real estate opportunities here, and possibly it may lead to many opportunities in a downward cycle if that does come about. But we don't know, but we're prepared for it.
Yeah. So it's just it was already a problem, but more likely become even more exacerbated, like you said. If you have a shortage and there's no new supply coming on, and all of a sudden the demand. Those are the magnets, like you said. It's like education and like those things, and that I love your percentages, right? Of 1.5 to Miami and 3%. Those are the founders, like every one of those. And that's just the ones who left, not to mention the ones who are moving in, like those who are like, hey, we're not going to, it has good fundamentals, and the things that have driven up the cost of living have to do with this very thing of it's just not enough to go around. Right. It's like people want to be there, but there's just not enough of it. And although that, maybe, cooling off compared to where it was, not sort of the, everyone, it's funny how we are as humans, like we're very binary. Like it's like, it's either really great or it sucks, or it's like, it was this and it's not. And of course that's never really how things work. So with that said, I mean, let's talk about the market and even before the pandemic and now that the submarkets in particular. I mean, because I've obviously been in the area, but I don't know it well. I don't spend a ton of time down there myself. So maybe share with us like the areas, the submarkets in particular that you guys have really been, bullish on and continue to be bullish on, and really where you guys are looking to transact. And why, and why you like those areas, paint a picture for us. Not everything looks like the picture of Fisherman's Wharf or whatever. I mean, I know it sounds weird, but like, those are the things that I think of when I think of the area, right? Like it's, so.
Yeah, I think a lot of people think of San Francisco and kind of correlate the entire region with San Francisco. But where we have found great success and where we have really liked investing in the previous many years is in the East Bay of the Bay Area. And the reason for that is the rents versus the cost of real estate in those markets in the East Bay, which would include major cities like Oakland and Berkeley, that ratio is very favorable. So the rents are very high, although they may be slightly lower than San Francisco. The price points of the real estate are much lower, and therefore it allows us to find very good opportunities with good yields, much better than typically would be found in a large city like San Francisco or even San Jose, which is what is can be considered in many ways the original Silicon Valley. Yeah. So kind of East Bay. And like you said, so it means, because I had another guest on recently, and he was, from the Bay Area or whatever. And he made a point is you usually think of investing in real estate in the Bay Area as more of a growth play, right? It's about appreciation because of this dynamic. We're saying there's only so much dirt, and you're kind of investing in real estate because, that over the long run, the appreciation rate is probably higher than obviously it would be in the Midwest or something like that. Right. So therefore it's not a cash flow play, but
the translation of what you're kind of saying is that you can, in the East Bay, as an example, sort of get both, right? Is that kind of what you're saying? Like when you look at the cost, yeah, maybe it's more than the cost there, but your ability in the rents, it is, you can be it can throw off cash flow. And yes, you can create, good forced appreciation through value add strategies, right?
Well, but I would say that, what we see investors doing in other markets, right? For example, in the South or the Midwest, is they are looking for cash flow, right? But when they do that, at least when we see a pro forma from other investors, they always have an accelerator of appreciation in their rents. And what's funny is that in the Bay Area, when Bobak and I underwrite properties, we never put an accelerator in for rents. We always will use current market rents. And in this COVID environment, we've become even more conservative. So really our value play in this market is reimagining the spaces, because the living spaces in the Bay Area command such a high premium that if we can reimagine spaces, make properties more efficient, then that is where the real value add is. Frankly speaking, Bobak and I don't look at properties for appreciation. That's kind of the cherry on top of the dessert, if you will.
Mm-hmm. It's the better. Yeah, maybe Bobak, you can speak to that for us. Just sort of like where you guys aren't chasing these huge projects, you're looking for spaces that basically have been it's inefficient use of space or the ability to add more rooms, or units or whatever. And we're talking in the 4 to 18, 20 sort of unit area, right?
Yeah, right, exactly. So, I mean, if you think about it, first of all, East Bay has definitely more of a housing stock that is, not been updated, right? And our motto is, renewing housing and delivering income. So basically, we look at very often vacant properties. In fact, mostly we're looking at vacant properties that just have been off the housing stock. So you bring those obviously on board. You're doing a service to the community by adding to the stock, first of all, and renewing it and putting it out there for use. And secondly, the value that you're adding is so substantial that we don't even think about appreciation, as Mark said. That's the cherry on top.
Yeah.
But the Goldilocks is really just finding the properties that have been either vacant or distressed or inefficiently managed or efficiently built, really for this modern day, 21st century, and therefore could really be a good fit for us to get to working, reimagining the space, getting every inch and every square foot of the property used properly as a livable space, which obviously adds a tremendous amount of value.
Yeah, and that's sort of like I think I said this when I've talked to you guys before. Like it's a bit like that lady who frequents all of the garage sales and the yard sales, and sales, right? Like she's got to go to a lot of garage sales, right? But if she keeps going, she's eventually going to find something that for a nickel, that's worth like $2,000 or something, right? Like you've got, like you said, like that's the reimagining. It's this, right. Everyone's driving by this building, or whatever it is, and they've just sort of like, it's just that they don't see it. And you guys are just scouring, trying to find something that you've got new vision for, and looking at it differently. Would that be sort of an accurate way of like how you guys?
Absolutely.
Yeah, absolutely. And if we didn't do it that way, then we'd have to be hoping and praying for the appreciation that you mentioned earlier.
Yeah.
But on the contrary, we don't have to do that because there is such a massive upside potential in reimagining spaces here.
Yeah. And that's, and I think that's with any of these strategies that, people execute, right? It comes down to knowing what your box is and, kind of owning it. Right. Because it's once you start to go, I mean, like in a market like yours, I mean, it is. And then you've heard people, it's so competitive. Like it doesn't even make it's some of them have just given up. Like it's not even worth it trying to compete for a 100 unit, 150, 200 unit multifamily building. Like you just can never feel good about what you're paying for it, and it just, it's odd. It almost feels like, why even try, but the thing is, and I think you guys don't want to move, right? You love where you live.
Yeah, no, I mean, we think California, and especially Bay Area, has a great future. And as I said, it's an undersupplied market. We don't mind diversifying. We don't mind buying something in Austin or, Miami or wherever other people are buying. Yeah. But this is the core of what we're doing. We're comfortable doing it, and we're very good at it, I think, what we're doing. So we're staying put. And, like Hewlett Packard, if you have a branch out there somewhere else, that's okay. But we're still staying put here.
Yeah. And I think that's the other thing is that you hear from, it's, and that's what I love about this business is that, having, especially a lot of what I do is spend time, helping people, figure out how to more efficiently capitalize their deal flow. Right. And so over the years, then I've been exposed to so many different ways that people can make money in real estate. Right. And it's, there's all sorts of ways to do it, right? And the people that ultimately end up being the most successful are the ones who have what I call, and I'd say this nearly every, it's conviction. Like they're convicted about what they're doing, right? And I think you hit on it, Bobak, right? I was just saying, for you, there's a huge undersupply, but you guys view it as you're adding net new, right, to the supply, right? And then for you guys, you're long, like you're going long on this. So because like a lot of people, like the strategy is just, so some strategies look very much the same. It's sort of like acquire it, add value to it, sell it. Right. And so they end up spending all this effort to acquire really high quality real estate to then only turn around and sell it to somebody else, because frankly, that's how you make money, right? Like they get paid by performance and they're promoted on the upside. And so maybe you guys can share a little bit about that too, how you arrived at the fact that you didn't want to play that game. If you're going to put this much effort into finding that diamond in the rough, right? Like our garage sale lady, you know what I mean? You weren't interested in, turning around and just selling it for $2,000 if you found this precious gem or whatever. Like, so maybe share that it's just different. It's counter to what some people are doing. So
you know what, Lance, I'll jump in here. I mean, I've grown up in the Bay Area, right? And so over the course of my entire life, have watched real estate appreciate, and we'll see a down cycle. Real estate will appreciate 100%. We'll see a down cycle for, maybe a 10% decline. And then a couple of years later, it'll go up another 100% over the course of 6-7 years. I mean, this is a cycle that happens over and over. It's happened my entire life in the Bay Area. Yeah. And so even though we talk about acquiring these properties and not underwriting the appreciation, with this long-term approach, holding these properties, that appreciation really does build up a significant amount of wealth and value in the portfolio that we hold. So it is that appreciation over the long term, of course, is very important here, because I think it is greater than probably in most other parts of the country. At least that's what we believe.
Yeah, I mean, it's just, there's a reason why people want to be there, right? And like you said, it's not just because of Sandhill Road and the venture capitalists and startup. There's more depth to the market than that. It's a beautiful place to be, right? I mean, it's temperate. It's not like we get up here like we just get rain and rain and rain and rain and rain. You get a little bit of rain, right? And it's not like ridiculously hot in the summer, and it's high quality, of living, right? And it's just a beautiful place to be, and it's peaceful, and it's like those things, I mean, for the moment, we'll just assume that those things aren't going away. Like it's going to maintain its beauty, and then those are the things. That's why people want to be there, right? So that's just fundamental, and so they're going to keep, like you said, keep coming back. We're independent of the fact that and they'll deal with the fact that they're overly taxed and all those other things, right? Like
that's a good point you bring up, Lance, because when you really look at the economics of development, even within industrialized societies like the United States, you see that there's a huge variation between states. So Texas is not as overbuilt, for instance, as California, or they hasn't been as impacted by technology labor. But believe me, in a few years, I mean, Austin is already undrivable, I hear.
It is.
But, believe me, in a few years, it'll be very much like the Bay Area. So the people will start putting up barriers. People will start regulating more. People will start saying, you know what, our commutes are now 2 hours instead of half an hour. And then we'll start talking about these things. And again, the disparities very often that are created by that concentration of technology and high skilled labor will eventually push people to maybe tax even higher. So, I think Texas, maybe, I don't know, just throwing a guess out there, maybe is where California was in the 80s or 90s. They didn't go as crazy as they do now. Things are highly regulated partially because it's a high opportunity, high cost area.
Yeah. And maybe the state won't, but the municipalities, might, right? I mean, and you see that in other areas. So maybe, on the balance, Texas is just not, like as a state isn't, but there's nothing stopping the city of Austin from implementing, much like we've seen in Portland and other areas, of very onerous taxes.
Absolutely.
So it's just, those are the things. But I guess the whole point, right, is like that it's not lose sight of the fact that there's certain places to live that are more desirable than others.
Yes.
Right. Like right. That's just a fact. This is coming from a guy who grew up in North Dakota. I mean, it's really, really cold and there's lots and lots of snow, and the summers, like you can maybe have a really nice day every now and then or whatever, but like the winds are like 60 miles an hour. And like, it just seems like now you're more appreciative because when you get a really nice day, you just soak it in, and maybe another place like California, like these people, it rains and they lose their minds. Right. But let's face it, like us as humans, like we don't forget that, right? Like they don't forget that. They're going, okay, if I had my choice, I could live in San Diego or I could live in North Dakota, right? All things being equal, I'll take San Diego, right? Like, for now. Now I know I'm completely omitting, the environmental changes that are taking place, because what I've heard is that soon Portland is going to be like, the place to be, and like Arizona is going to be like literally the face of the sun. And so with you guys down in the Bay Area, like you won't be able to grow grapes anymore. You won't have to do it yourselves. Yeah. And then we're going to be the thing. And then eventually we'll be the ones that'll be like the face of the sun. Everyone will leave Arizona. But my guess is that we'll probably, the three of us won't even be around. We'll be like long gone.
Let's hope so.
Oh my God.
Yeah,
let's hope so. Yeah. It's a whole nother show we got, a whole other show to have. So. And I'm sure we could bring on some of your fellow friends from the, the Berkeley area and whatever. They could really take us to task on environmental change or whatnot. So,
well, I remember when I was even just starting grad school, early 2000s, Berkeley was such a rainy place. It was not really that much better than Portland, and I just spent, I think, 2 weeks ever in Portland, and I was just so depressed. It was raining nonstop. And Berkeley was, it would get a huge, very rainy summers, very wet summers. It was just crazy. You would think, this is summer here. But now you're almost not getting any rain. So things have really changed, even just in the past 20 years.
Yeah, and I joke, but it's legit. I mean, it's clearly happening, and if you can't see it, then you're just not paying attention or not willing to look at the data. But those are things. And I think that's why we do the show, is that to be a good investor and a savvy investor, you have to contemplate these things. That's what I mean. Like, this is why this discussion matters. So it's not just, you just can't, whatever someone says or you read or whatever, like you can't just take everything, whatever the internet says at face, like as truth or gospel, right? Like there's always nuance to things. Yeah. And I think being inquisitive and, digging into stuff and really understand what's going on is important if you want to be a successful investor, right? Yeah. Which I think that that's the other shift that we're seeing, is that people are realizing that they can't abdicate that responsibility to someone else. Maybe like they had, way back, in when everyone was had pensions, right? Like it was sort of set for them, and it was what it was, and then. But then it was sort of like, well, you're on your own. And then they hired an investment advisor. I don't have a problem with investment advisors, but the point was about the abdication, meaning where you aren't taking responsibility for your own wealth, right? Your own long-term future. right? And now what's happening is that, people are starting to become more interested. That's why we do the show. Like, you got to learn, even though it can be intimidating and all these things. Like, if you're going to make an investment, especially passively in anything like this, it's getting down deeper into, like I always say, it's like you go until you hit the dirt. You figure out, like, what, in real estate anyway, that's how you can do it. Like, does that make sense? Right? Like the thesis of East Bay or whatever, like, does that make sense to you? Right. It should. Like, okay, so they were working they worked at Oracle or whatever, and they were located in downtown San Francisco. So they didn't want to drive far. So then they had to pay $4,000 for a 1-bedroom apartment or whatever. Like, they did it because they had this great job and, upper mobility and the chance of some outcome. Well, then they say work from home. So they're like, well, I still like the area. I'm just going to drive across the bridge and go live over there. Like, right. It's not that far fetched. Like, that makes a hell of a lot of sense.
20-minute BART ride.
Yeah, that's right. Yeah, take the BART across, you know what I mean? Maybe take in oh no, that's right. The Warriors moved to San Francisco. Rather than like picking all of your belongings and moving to Miami, right? Like, okay, maybe someone's doing that, but that's some very different things, right? Being someone on the West Coast compared to like Miami, like, can you get any further away? It's not that people aren't doing it, but how many are doing it? Does it make sense to you? But that's with everything. Does the thesis make sense? And digging in and trying, if it doesn't make sense to you, then you need to be like Warren Buffett. Like, it don't make sense, you don't invest.
Right.
If you can't get your mind wrapped around it. Yeah. If you don't understand it. And it's hard. And I think that this is the role that people like us and guys like you, and we've had this discussion offline many times, right? Like, yeah, I get it. There's different ways of capitalizing deals. And yes, but you can't escape the fact that you guys in position, as you're doing deals and want those to participate with you, right? Is that it's an education. It's educating them about this stuff. How do we do what we do? Why do we do what we do? How can you participate? What problem do you have in your portfolio? What are you trying to solve for? How can we create creative solutions to do that? It's everyone wants to, in many regards, to shirk it, like to be like, oh, dude, it's too complicated. I don't want to wrestle with it, right? But it's like, no. This is your own wealth. It's your own livelihood. These are discussions we have to be having, right? Because you can't just blindly throw money into things. Like, it's not a good strategy. It's a terrible strategy in anything, right? So
probably my best multifamily education was when I first got interested in multifamily. I did passively invest in a syndication deal. In Texas, actually. And I did get to learn how that property was managed and what the strategy was. And this happened to be a 172 unit apartment building. And just to kind of put an exclamation point on what we've been talking about today. So I did get to see the P&Ls from that deal as time went on. And that 172 unit property was generating a net profit very similar to our 12 unit Oakland deal that Bobak and I were in a couple of years later. So It just goes to show you that the scale in other places can be much smaller here, but just as profitable, and in many cases more profitable.
Yeah, that's right. And that's just it. It's not all the same. You have to dig into it because there's different dynamics, right? And it's and if you don't understand what those dynamics are and what those drivers are, that's what it's all about. That's why it's not to take away from, it is a good idea to see where people are moving from and where are they moving to. But then the next question is why? Why are they doing it? What does that place have? What's going on there? What are the problems they have? All of those things have to be considered, right? And there's always movement. That's the beauty of it. And I say that's the beauty of real estate. Highly fragmented, very, it's not volatile, but it is fluid. Neighborhoods are gentrified, and it's ever changing. Because once again, there's only so much dirt. There's only so much there, and there's more desirable characteristics of certain plots of dirt than others, right? Being on the beach in San Diego, nice. Being in the frozen tundra of, Duluth, Minnesota, not as nice. Therefore, you're not going to see crazy appreciation. Suddenly they strike oil. What happens? North Dakota, boom, it goes up, then it goes down, right? Like you can't avoid that. You have to take those things into consideration when deciding if you're going to invest. You should. So cool. Well, where can people find you? So like, where can they find you? Where do you guys got your website? Where do they connect with you guys?
Sure. So our website is www.bay-housing.com. And you can connect with us from the website. Our emails are there. And we have a lot of information there that goes beyond what we've talked about today about our strategy and the opportunities here in the Bay Area.
Cool. Well, it's been great, guys. Love always connecting with you guys, and have a good one.
Yeah, thank you. Lance. I appreciate the opportunity.
Yeah.
Thanks, Lance.
All right, guys.
Okay.